Okay, now we're going to take a look at how we divide net income and net loss. You have to remember when we're talking about this, the purpose of dividing net income or net loss is to do step 3 in the closing process, right? Remember step 1 is what? Revenue to income summary, and step 2 is expenses to income summary, and step 3 is income summary to capital. Well, in a sole proprietorship, that's easy because there's only one capital account. Now, with a partnership, I have a capital account for each partner. So that means some of the income goes to this partner and some of it goes to that partner. Remember, it's important to remember, partners, just like sole proprietors, are not employees of the partnership. That's their owners, so they don't report salaries as an expense on the income statement. So when we talk about salary allowance, we're going to do that in a little bit. That doesn't mean somebody's getting money. This just means it's a way of dividing net income and net loss. Profit and losses are divided on some agreed upon ratio. So we're going to look at 3 different ways of taking the net income and dividing it between the 2 partners. Now, the first method that we talk about is stated ratios, right? Now that's really simple. We can say that one partner gets 60% and one partner gets 40%, so that's 100% of the income, right? Another way to look at that is we might write this as in a ratio of 3 to 2, right? 3 to 2. When these ratios work, what I do is I take that 3 and 2 and I add them, and one partner gets 3/5 and the other partner gets 2/5, right? Well, if you divide 5 into 3, you'll find out that that's what? 60%. And you divide 5 into 2 and you'll find out that that is 40%, right? So what I want you to remember is we can give you that stated ratio as a percentage or as a ratio, right? As a ratio. Now don't let these ratios throw you for a loop. They're not hard, right? So say that I have a ratio that is 4, I have 3 partners, right? 4 to 3 to 3. 3 partners, partner 1, partner 2, partner 3. 4 plus 3 is 7, plus 3 is 10. So that means that this guy gets 4/10. This person gets 3/10, and they get 3/10, or 40%, 30%, and 30%, right? So that's all we're talking about when we talk about these stated ratios. Another way that we might look at it is to talk about dividing net income based on the capital balance in the partnership. That really rewards the partners that leave their capital into the business. And that's just simply a portion. We'll do a little example of that. And then we can also look at more complicated schemes where we divide it based on the commitment to the business and how much capital you leave in the business, and selected ratios. So we can combine some of these methods. We can combine some of these methods together, right? Remember, the purpose of this income division is to decide how much each partner gets when we do the closing process, right? How much their capital balance is affected, how much of the income belongs to them. We go back to Zane and Perez, right, in the partnership agreement. Zane's to receive 2/3 of the income. Perez is to receive 1/3 of the income or loss, right? Remember, it's not always better to have a higher ratio, because if this person receives 2/3 of the income, well, bonus to them, right? But if there's a net loss, they're also going to suffer what? 2/3 of the loss. Doesn't matter this time because partnership income is what? $60,000, right? $60,000. So all we do is we take what? 60,000 times 2/3, and that's going to give us Zane's share of it, and we take 60,000 times 1/3, and what is that? 40,000 and 20,000, right, for Zane and Perez. Remember, our goal is to do what? Get to step 3 of the closing process. Net income $60,000. So we know we have this income summary account, right? And after step 3, it has $60,000 in it. Well, step 3 says to do what? Close income summary to capital, right? So now I know I have to do what? I have to close this by debiting it, and Zane's capital is going to get a credit of 40, and Perez is going to get a credit of 20, right? So we'll do that journal entry, right? We'll do that journal entry to divide the income between Zane and Perez in a ratio of 2/3 to 1/3, right? In a ratio of 2/3 to 1/3. So that's pretty straightforward, right? That's just that stated ratio. We also might see this written as what? As 2 to 1, right? Because it means what? 2/3, 2 plus 1 is 3, and 1/3. We could have wrote that way. So that is an allocation that's pretty simple, right? Based on stated ratios. Now, what happens instead if we do their allocation based on the balance in their capital account? So now let's say that they're going to allocate profits and losses based on how much they have in capital at the beginning of the year, right? And again, they have $60,000 in income. So I'm just going to show you this whole table, right? I'm going to show you this whole table. So what we have is capital balances, right? Zane had capital balance of $30,000, remember, at the beginning of the year, and Perez has $10,000. We just take that as a percentage, right? So $30,000 as a percentage of $40,000 is 75%. $10,000 as a percentage of $40,000 is 25%. Total of 100, right? I take 75% times 60,000 means that Zane's share is 45,000. 25% times 60,000. Perez's share is 15,000 for a total of what? 60,000 bucks. So that means of the $60,000 in income, Zane is going to get credited to his capital or her capital account 45,000, and Perez is going to get a credit in his capital of 15,000. So now our closing entry looks like this, right? Debit to income summary of 60,000, Zane of 45, and Perez of 15,000. Again, this one was fairly straightforward. We just did it according to what the ratio of their percentage of ownership, right? Another way you could have done this, right? This would have worked too. The ratio of the capital balances, right? So the ratio is what? 30,000 to 10,000, right? Well, just like an equation, you can do the same thing to both sides, right? I divide 10,000 into this side, I get 1. I divide 10,000 into this side, I get 3, right? So that means they're dividing it in what? A 3 to 1 ratio, because 3 plus 1 is 4. 3/4 is 75%, right? 1/4 is 25%. So you could have also seen this written as a ratio of 3 to 1 that we could have went through the same process we did before. Okay. This last one is the most complicated, right? Where we use combinations of all different kinds. So you have to kind of pay special attention, right? We're going to change things up a little bit. We're going to do this a couple of different ways. So now we're going to say that the partnership agreement says this, right? Zane receives a $36,000 salary allowance. Perez receives a salary allowance of $24,000. Now that doesn't mean they get paid that in cash, right? This is just a tool that we use in the process of dividing net income. We're also going to reward partners for leaving capital in the business, so I'm going to give them an interest allowance of 10% on their beginning capital balances, right? And then any remaining balance of income or loss is allocated equally. And we're going to divide income of 70,000 bucks using this 3-step process, right? Now I'm going to do this from scratch. We'll build a little table for each partner, for Zane, for Perez, and this one I'm going to call remainder, right? And we're going to start with net income, right? And we have net income of 70,000 bucks. Now remember, the first thing that it said was what we had: salary allowance of 36,000 for Zane and 24,000 for Perez. So we're gonna state that. We're gonna say salary allowance of 36,000 for Zane, 24,000 for Perez. So we started with 70,000 bucks, right? Now, we've explained some of that through this salary allowance. So I take 70,000 minus this total, 70 minus 36 minus 24. So that would be what? $10,000 of a remainder, right? So of the 70,000, we've explained 60, and we still have 10,000 left to explain. Well, we also said we gave them what? An interest allowance on their beginning capital balances. Well, remember, Zane had capital at the start of what? $30,000, right? So 10% of $30,000 would be $3,000, right? And Perez had a capital balance of $10,000, so we would have an interest allowance of 10% of that, or $1,000, right? Now look what we got: 10 minus 3 minus 1. So now I've got what? $6,000 left, right? Because 10 minus 4 is 6. So now I have to explain that last little bit, right? And the last little thing says what? Any remaining balance of income or loss is allocated equally. So I'm going to take that $6,000, and I'm just going to come down here and I'm going to write equal. And of the 6, each gets 3,000, right? And now 6 minus the 6 is 0, right? If I total these up, 36 plus 6 gives us 42,000. 24 plus 1 plus 3 is 28,000. So of the $70,000, right, Zane is going to get credited 42,000. Perez is going to get a credit of 28,000, right? So remember, our journal entry would be what? Income summary for $70,000, and we have Zane capital of 42,000. Perez capital of 28,000, right? So this is step 3 in the closing process. Same step we've been doing every time, right? So that's what happens when we divide $70,000 in net income, right? So one last little look at that. So now we're going to do the same thing, only this time we're going to assume that we only have net income of $50,000, right? Same process otherwise, right? So I have my two partners, Zane, Perez, and my remainder, right? Now this time we have what? Net income of $50,000. Okay, so this is going to look a little different. We still have the same scheme though, right? Salary allowance is $36,000 for this person and $24,000 for Perez, right? Now watch what happens. 36 plus 24 is $60,000, right? We've only got 50,000 here. We still just do the math, right? 50 minus 60 gives us what? A $10,000 negative, right? So now that's a negative number. Don't worry, that's okay. We can still make that work, right? We still have to do our interest allowance. Remember, it's 10% on the original balances. So 3,000 for Zane and 1,000 for Perez. So now 10,000 negative minus those gives us what? Now I'm in the hole by $14,000, right? But I still do what? I just divide that equally. So I'm going to take that negative 14,000 and I'm going to divide it between the two partners, right? So $7,000 minus and $7,000 minus. That goes to 0, right? And 32,000, 18,000, right? 36 plus 3 minus 7, 24 plus 1 minus 7. So our step 3 looks like what? Income summary, $50,000, right? And Zane capital, 32,000, and Perez capital, 18,000, right? So we're not tricked up by when that goes to negative, and that makes sense, right? Because we might have to divide a net loss, right? So it might start out negative. We just do what? We go through our process, right? This means that what? Zane gets a little more share of net income because the salary allowance is higher. they get a little more of the interest allowance because they have more capital in the business, and then they divided that remainder equally, right? So that's really the process of income division. That's an example of each way that we have of taking a look at it. So there you go.